Good morning. You're watching Market Cafe with me, Shriyansi Singh and Snehi Shah on ET Now. And over the next 1 hour, we'll take you through news and updates from within the country, across the globe, as well as tell you which stocks you should keep on your radar and tell you which stocks brokerages are highlighting as well. Lots to cover on this show, Snehi. So let's get started by looking at the international handover first.
Well, yes, so good moves coming in from the US, at least if you see on a monthly basis for the month of March, or even if you see it for the last week. Over the course of the week also, the markets ended positive. And let's take a look at what the US markets did when we take a look at it on the intraday trading session on Friday then. And so good moves coming in, and stock futures rose slightly on Sunday evening as Wall Street prepared for the start of the second quarter. Now we have the financial year beginning today, and the US, they follow a calendar year as a financial year, so their second quarter begins today. And the personal consumption expenditures price index that came on Friday during the market closure for Good Friday showed inflation rose to 2.8% in February, which is largely in line with what the street was penciling in. The inflation gauge, closely watched by the Fed Reserve, also rose 0.3% from a month ago. This is what the Commerce Department had said. And in other news, the major averages are coming off a winning first quarter. The S&P 500 jumped 10.2% for its best quarterly stretch since 2019. So more than 5 years, it's seen the best move in more than 5 years, while the Dow Jones Industrial also added 5.5% for its best quarter since 2021. Nasdaq pumped roughly 9%, and markets also wrapped up a winning March and their fifth consecutive positive month. The S&P and Dow rising 3.1% and 2.1% respectively. Nasdaq also edged up 1.8% for the month, and Wall Street is readying for a busy week of economic data that starts today with construction spending for February and the ISM manufacturing data due for March on today. And the keynote March jobs report is on due for Friday as well. You'll also be seeing initial jobless claims and the oil rig numbers coming out. So lots of important data coming out of the US this week, and lots to watch out for as well. With that, let's also take a look at what Europe has done, and largely a sea of green when it comes to the European markets as well. DAX closed rather flat, FTSE was up 0.2%, and CAC was also very flat, but all of these indexes with a slight positive bias. So not much to worry about when it comes to the European market. Stock 600 was also flat, but here not in the negative territory, so that's good news, right? And with that, let's also take a look at what's happening in the world of oil. Shriyansi, tell us more.
Absolutely. So it's very interesting what we've seen play out in the world of oil. Of course, Good Friday was a holiday, right? But then when you look at the moves on Thursday, oil prices rose by more than $1 a barrel on Thursday, and this was after falling for 2 consecutive sessions on the prospect of supplies, given the OPEC Plus producer alliance is widely expected to stay the course on its current production cuts. So when I'm looking at Brent crude futures, they rose 1.6% to settle around that $87 a barrel mark, and WTI as well gained 2.2%, settled around that $83 a barrel mark. Now both benchmarks were up more than 2% on the week and were on track to finish higher for a third consecutive month. So those were the kind of moves that we saw in the oil markets. And in the prior session, that is on Wednesday, oil prices had come under pressure from last week's unexpected rise in US crude oil as well as gasoline inventories, driven by an increase in crude imports and sluggish gasoline demand, according to the EIA. Now, investors will of course be watching out for cues from a meeting next week of the Joint Monitoring Ministerial Committee of Producer Group, the Organization of Petroleum Exporting Countries. Now, increased geopolitical risk has raised expectations of possible supply disruptions, but you do have the OPEC Plus that is unlikely to make any oil output policy changes until a full ministerial gathering in June later. So that was largely the move coming in for oil. But when I'm looking at gold prices as well, gold prices hit a record high on Thursday, logged their best month in over 3 years. Now, on a monthly basis, this was the best month since July 2020, and at a 9% increase, right? Then when I'm looking at the quarter, it was a second straight quarterly rise as well. So solid moves coming in for gold as well, Snehi.
Well, absolutely, and with that, we have a very heavy week ahead of us. So let's take a look at all the important events that you need to be watching out for. And when it comes to India, then on the 29th of March, you had the Forex Reserve, and from the 3rd to 5th April, you have the first MPC meeting happening for this financial year for FY25. So we'll be tracking that one closely. 4th of April, you have the fortnightly credit growth update, and 5th April, you have the MPC meeting outcome as well. Shifting focus, let's talk about what's happening globally then. And today you have the manufacturing PMI coming out of the US, 3rd April services PMI, 4th April initial jobless claims like I mentioned earlier. And from the UK then, tomorrow you have manufacturing PMI, 4th April composite services PMI coming out, and from Eurozone 2nd April, which is tomorrow, you have the CPI coming out, so that one will be the one to monitor for closely. And from China then, you have a whole host of data. Today the cakes and manufacturing PMI is going to be coming out, and 3rd April you have the cakes and services PMI as well. Let's shift focus back home and take a look at what's happening on the corporate front then. Today is the last day to buy shares of, in fact, over the course of the week, it's going to be the X date for companies like Bharat Dynamics, GPT Healthcare, TVS Holdings, Varun Beverages, Ashok Leyland, Sundaram Clayton. It's going to be the last day to buy all of those stocks to be eligible for their interim dividend over the course of the week. And 4th of April, the stock of Cupid will be splitting in terms of face value. It will be going from 10 rupees per share to 1 rupee per share, and the bonus issue will also be happening in the ratio 1:1. When it comes to the primary markets, 3rd April, then you have the Bharti Hexacom IPO opening. It's going to be a big one for the street, so we'll be watching out for that, and that will be closing for the 5th on the 5th of April as well. And lock-in period also over the course of the week is going to be ending for a whole host of stocks, the likes of Global Services, Sisal, Kalamandir, JSW Infra, Platinum Industries, as well as Exicom Telesystems. So well, these are all the cues that we need to be watching out for over the course of this week's trading session.
Well, lots of cues to keep an eye on, but let's center our focus back to macros this morning. US prices rose moderately in February while cost of services outside of housing slowed considerably. The personal consumption expenditures price index was up 0.3% last month. Data for January was revised higher to show the PC price index climbing 0.4% instead of 0.3% as previously reported. In the 12 months through February, PC inflation advanced 2.5% after increasing 2.4% in January.
Well, and South Korean car maker Kia is recalling 427,000 Telluride SUVs due to a defect that may cause the cars to roll away while they are parked. Kia America decided to recall all the 2020 to 2023 models and select 2024 models as well of the Tellurides earlier this month. At the time, no injuries or crash have been reported so far.
And in other news then, Turkey's leading opposition party has claimed big election victories in the main cities of Istanbul and Ankara. The results are a significant blow for Recep Tayyip Erdogan, who had hoped to regain control of the cities less than a year after he claimed a third term as president.
And well, some news from over the long weekend. Cryptocurrency maverick Sam Bankman-Fried received a 25-year prison term for his involvement in a massive financial fraud case. He was found guilty by a New York jury, and US prosecutors were seeking 40 to 50 years of imprisonment.
And as the nation gears up for the upcoming elections, Bharatiya Janata Party has announced its election manifesto committee under the chairmanship of Defence Minister Rajnath Singh, Finance Minister Sitharaman and Commerce Minister Goyal are appointed as the convener and co-convener respectively. Other members include Union Minister Smriti Irani, Ashwini Vaishnav, Rajiv Chandrasekhar and other prominent BJP leaders.
Well, alright, and let's keep it with the elections because the 2-month-long election carnival has just begun in the country with the announcement of dates for the parliamentary election and results on the 4th of June. Markets across the country have geared up with a variety of campaign-related materials, but this time around, the impact of digital campaign is visibly seen on the business of traditional campaign-related materials. ET Now's Prakash Priyadarshi takes you through all of those details.
Traders in Delhi's Sadar Bazaar are annoyed because of subdued order for election campaign-related materials like flags, caps, t-shirts, cutout, banners, posters, badges, etc. They have a valid reason to believe the impact of social media such as Facebook, X, Instagram, WhatsApp, YouTube on their traditional business. Despite the announcement of candidates for a maximum number of seats, Political parties are very selective this time when it comes to making campaign material orders. Therefore, traders across markets have received just 20-30% orders of their total expected volumes.
With the announcement of the dates for the parliamentary election, the 2-month-long election carnival has brought some cheer for traders. Traders who deals in election campaign-related materials are expecting some good orders from the political parties. However, they have received just 15 to 20% orders so far, which is expected to grow further.
Lok Sabha elections are believed to be the biggest occasion for the traders to deal in campaign-related materials, but other than the BJP, political parties have been hesitant in placing orders so far.
कैंडिडेट्स के अलाउंस होने के बाद ये उम्मीद है कि हाँ क्या पता कोई आ जाए थोड़ा बहुत, अभी तो शुरुआत है ये, ठीक है, अब क्या पता आगे थोड़ा सा कुछ ज़्यादा ही हो जाए, अगर हो जाता है तो बहुत अच्छी बात है, नहीं तो अभी तक खाली बैठे हैं, अभी तक तो कुछ हुआ नहीं है। 70% हम लोगों को असर पड़ा है डिजिटल कंपनी से।
However, BJP is still exceptional in procuring campaign materials, but there is almost a 70% drop in orders coming from principal opposition party Congress. Campaign materials targeted to smaller parties like SP, BSP, RJT, AAP, Shiv Sena, NCP have been kept ready in advance, and traders are expecting double the order sizes going forward.
अभी बीजेपी के ऑर्डर आने हमारे पास शुरू हो गए हैं। दूसरा बीएसपी के कुछ ऑर्डर आ रहे हैं, कैंडिडेट को टिकट मिल रही है। समाजवादी के हैं, कांग्रेस का ऑर्डर अभी 1-2 भी नहीं आया। 547 कैंडिडेट है, इनटू 4 पार्टियां मिला के टोटल 3000 कैंडिडेट हो जाते हैं। ये 3 से लेके 500 करोड़ तक का मिनिमम बिजनेस है।
More regional parties are now trying their luck, especially after the division in Shiv Sena, NCP, LJP and others. But the larger participation does not translate into more order when it comes to campaign material business.
Well, time for a quick break then, but when we come back, we'll take a look at how the Asian markets are faring.
Hi there, welcome back. You're still watching Market Cafe on ET. Now let's take a look at how the Asian markets have opened up this morning, and while they've largely opened up in the green as investors assess China's business activity for the month of February and await economic data out of Japan. And let's take a look by starting at China. And China's National Bureau of Statistics data showed that the manufacturing activity expanded in March, with the Purchasing Managers Index, which is PMI, registering a reading of 50.8 compared to February's reading of 49.1. Now remember, any quantity or any figure above 50 indicates an expansion, and any figure below 50 indicates a contraction. So that economy has just rebounded from a contraction to an expansion just by a slight margin, but still in the positive nonetheless. So economists polled by Reuters expected a reading of 49.9, which was still representing a contraction in the sector. But on the back of this 50.8 number that has come out, the market is reacting to it rather well, and well, 0.6% up is where Shanghai is. Separately, let's also take a look at what's happening in Japan, because Japan's first quarter Tankan survey showed that the business optimism among large manufacturers fell, with the gauge at +11 compared with +12 in the last survey. However, optimism among non-manufacturers rose, with the Tankan gauge at +34 compared to +30 in the previous quarter, and beating Reuters' expectations of +33. But the street doesn't seem to be looking at this part, because the markets are trading in the red as we speak, and the survey gauges business sentiment, which the Bank of Japan monitors while formulating the monetary policy. So in the morning, well, when Japan opened, it was up 0.4%, but it has fizzled out all of those gains and is down 0.7%, a 288-point cut coming in on Nikkei as we speak. Moving on, let's also take a look at what's happening in Korea, because Kospi was up 0.3% when it opened, right there, still up 0.3% right now. What's key to note is that Australian and Hong Kong markets are closed today on the account of Easter Monday. So the ASX 200 and the Hang Seng rates you will be seeing are from the previous week. Also on Thursday, let's take a look at what our markets did. And well, excellent trading session coming for us on Thursday. 22,346 is where we ended. Implied open at 22,533. So, well, on a spot basis, rather gap up opening indicated for us, new financial year. So, let's see, Shreya, see how the market reacts to that and how we kick off today.
Absolutely. Let's see how that pans out for us. But moving on then, Vineet Jain, Managing Director of the Times Group, received the Exchange for Media News Broadcasting Awards Lifetime Achievement Award 2023 for his significant contributions to Indian television news. Accepting the award at a ceremony over the weekend, Jain attributed the achievement to the collective efforts of teams at the Times Group. Listen in to what else he had to say.
I have many miles to go. Work has been and will always be a passion for me. But thank you, Exchange for Media. I'm deeply humbled. I dedicate this award to our teams across the Times Group and would like to acknowledge the support of my elder brother, Mr. Sameer Jain, in my journey to expand and diversify the group. Having handled the day-to-day running of the group for the last several decades, including as its chief content architect, I have been fortunate to be able to successfully create #1 brands in every sector of the media.
All right, well, let's get a move on from that and take a look at the managements and the market voices we have lined up for you on the market today. Starting at 9:20 on our Market Maker segment today, we will be joined by Ravi Dharamshi, the CIO at Value Quest Investment Advisors, and he'll be here to talk about how he's navigating the markets when it comes to the new financial year and the themes and the sectors that he's positive on. And well, to talk about what's happening in the world of exports, are they recovering and what optimism lies ahead, we have the management of Gokuldas Exports, Siva Ramakrishnan Ganpati, who's the managing director. He will be joining us on that note. And at 9:50 then, remember today is the 1st of April, so we'll be getting a whole host of auto sales data, and we will be joined by Horma Sorabji, the editor at Autocar India, to discuss about just those numbers. And moving on at 10:20 then, we'll be joined by the management of Senco Gold. Suvankar Sen, the MT and CEO, will be joining us to talk about the festive cheer and the price rise that we've seen in gold and what lies ahead for that commodity. So power pack lineup. Well, hi there, welcome back. You're still watching Market Cafe on ET Now. Let's talk about the pharma sector a little bit, because pharma giant Aurobindo Pharma's upcoming penicillin G facility at Kakinada in Andhra Pradesh is expected to commence commercial production soon, which is expected to be a critical substitute for major imports. My colleague Somit is joining in with all of those details. Good morning, Somit. Take it away.
Well, Aurobindo Pharma will remain in focus. They have announced the commissioning of its integrated penicillin G plant. Integrated means that it is present across a value chain, that is glucose, penicillin G and 6-amino penicillinic acid as well. Now, this manufacturing of this penicillin G project is under the PLI scheme of the government of India. The capex requirement for this plant was around $250 million, and they target to manufacture nearly 15,000 tons of Pen G, that is penicillin G per annum. Now, this will be critical import substitution, given the fact that India imports a lot of this product from the Chinese market. And if you see, currently Pen G's equivalent annual import by India is over 26,000 tons, and this project could substitute nearly 57% of the domestic demand. Now, Aurobindo Pharma expects to consume about 45% of the produce for the captive use, but for external purpose, they are expecting a large portion of the external sales will be in the form of value-added downstream products. Now, considering the demand potential, the scope of value addition, cost savings, the known incentive of nearly 20% on sales and captive consumption, analysts believe the project looks lucrative and could drive value growth for the company from the first quarter of the next financial year, that is FY25. Now, assuming an average price realization of around $25 per kg for Pen G and around $35 per kg for the 6 API, that is amino penicillinic acid, and assuming 65 to 90% utilization level for FY25 and FY26, this project could add an incremental earnings contribution of nearly 8 to 9% for FY25 and FY26. Analysts also believe the project could increase the overall company's EBITDA margins by more than 150 basis points from starting from FY25. So keep an eye out for Aurobindo Pharma in trade.
Right, thanks, Amit. So we'll keep an eye on Aurobindo Pharma. But moving on then, let's switch gears to Motown. How did automakers perform in March? Will the auto companies be in top gear in the new financial year, or will it be a bumpy ride ahead? Srishti is joining in with that analysis. Srishti?
Well, yes, CVs as well as tractors, the month-on-month recovery will be a key monitorable to track this time. While for the two-wheelers, we are expecting that the robust demand trend will continue in the month of March itself. So all in all, we are expecting a good set of data in the month of March across the segment. Let's start company-specific action then, and this time we are expecting that the passenger vehicle segment is expected to post a double-digit growth on a YOY basis. But on a month-on-month basis, no substantial change out there. For M&M Auto, we are expecting close to 77,000 of units being sold. For Tata Motors passenger vehicle segment, we are estimating 53,550 units for the month of March. And when it comes to Maruti Suzuki, this one will be a key to track. 15% growth YOY. Sort of a growth on a month-on-month basis, and 1.95 lakhs is what we are expecting. On the commercial vehicle segment, do remember that last year it was the OBD2 norm transition that was happening, so that's the high base. So if you compare the YOY numbers, there will be a decline, but if we compare the month-on-month recovery, then more than 20% jump is what we are expecting across the companies, and the highest could be for Eicher Motors VECV, where we are expecting 10,510 units to be sold in the month of March. Tata Motors commercial vehicle segment, we are penciling in 42.3 thousand of units, and for Ashok Leyland, close to 22,000 of units is what we are expecting. Now let's have a look at the two-wheeler segment. Here the exports are doing well, the domestic demand is holding up strong, and across the board we are expecting a decent set of numbers. Bajaj Auto 3.4 lakhs is the estimation, TVS Motors 3 lakhs, though there could be a decline of 10% on a month-on-month basis. But barring that, Eicher Motors, Royal Enfield as well as Hero MotoCorp, they are expected to post a growth of 2 to 4% on a month-on-month basis. And lastly, from the tractor sales, no substantial change on a YOY basis. But if we see the month-on-month jump, then we are expecting more than 30% jump when it comes to Escorts number. Close to 9,000 of units is what we are expecting for Escorts. And when it comes to M&M Tractor Division, 27,500 units is what we are expecting. One of the key markets, that is the southern markets, is still under pressure, is what the dealers are highlighting. But going ahead, given the festive, given the rainfall expectation, the tractor companies could come out with a positive commentary. So we will have our eyes on that as well.
All right, Srishti, thanks so much for taking us through that. Let's take a look at two stocks that will be in focus today on the back of their analyst meets that they held over the course of the weekend. Both those companies being ICICI Lombard as well as Suven Pharma. Let's start by looking at ICICI Lombard first. They say they aspire to grow their health market share of 4.5% over the next 3 to 5 years. They believe that they will maintain roughly between 9.5% to 11% market share when it comes to the motor insurance market share in general. They say that the incident rate for motor insurance is 2 times lower, and they will also continue to invest in digital and tech initiatives. Looking forward, they will improve profitability along with scale benefits. So they're saying that the benefits of scaling will also aid the profitability of the company, and the digitization is enhancing efficiencies going ahead. It has also helped them cut costs, and data analytics is helping in adopting a strategic approach when it comes to the future outlook. And their IL Take Care app, that app has seen a 2.1 times growth in download and has generated a 3.2x GWP, which is the gross written premium. They're also saying that the use of generative AI or artificial intelligence has led to a 30% jump in productivity. So that's some positive commentary coming in on ICICI Lombard. On the back of that, you have two brokerages that have come out with the price targets for this stock. Motilal Oswal has a buy rating on the stock with a price target of 2,000 rupees, and Yes Securities has an add rating on the stock with a target price of 1,875. But that was about ICICI Lombard. Let's move on and take a look at what the analyst meeting of Suven Pharma, the management, had to say. They say that the diversification is a real trend and innovators are looking at new geographies for supplies. Now remember, they've gone ahead and announced a merger with Cohance Life Sciences. So they say that Cohance has significant capabilities and technical expertise in the ADC payload manufacturing. The next 2 or 3 quarters could remain challenging due to weak global macros and low funding in the global biotech space. But at the same time, Suven also believes that some green shoots in the sector could emerge by the second half of this calendar year. Now, once the macro environment improves, it would take the company 6 to 18 months for that to reflect into the P&L of the CDMO firms. Other key challenges they highlight for the Indian firms is the turnaround time for low volume products, and that is still higher compared to China. So, while a slight tinge of positivity coming in the note, but a rather subdued note coming in from the management. So, we'll see how the stocks of ICICI Lombard as well as Soin Pharma perform in today's trading session on the back of this analyst meeting that happened over the course of the weekend.
Absolutely. So we'll keep an eye on both those counters. But moving on then, let's take a look at the cement sector because that will also remain in focus today. Cement channel checks suggest that the prices fell in March and have been the lowest since 2021. The dealers, however, indicate a price hike announcement in April but are skeptical if these are sustained. Ashesha is standing by with more details. Ashesha?
Well, yes, cement prices continue to decline and they've fallen for the 5th consecutive month in a row in the month of March. Remember, the last price hike was seen in the month of October, and this turns out to be the 5th consecutive month of price cut. Prices have declined by nearly 2% on a month-on-month basis in the month of March, and on a sequential basis in the fourth quarter, cement prices have declined by nearly 5.5%. In the fourth quarter, EBITDA is expected to be on the weaker side on account of lower pricing, which will be partially offset by lower raw material costs and operating leverages that these companies enjoy. Apart from this, volume growth is expected to be on the higher side in the fourth quarter on account of year-end activity, which is expected to aid volume growth. All in all, in the fourth quarter, we are expecting EBITDA to fall, although volumes will be on the stronger side. As far as price hikes are concerned, dealer channel checks are indicating that perhaps cement companies could undertake price hikes in the month of April, but whether these price hikes will sustain will be a big question. As far as the region-wise price cut is concerned, eastern region saw the most price cut of nearly 9%, followed by the northern and southern regions which saw a price cut of nearly 5%, and western region saw the least impact of about 3%. So, cement companies in focus today on account of price cuts that we have seen continuously for the 5th consecutive month.
Right, Ashesha, well, we'll be watching out closely for the cement sector and all the cement stocks. But Ashesha, while you're with us over here, take us through all the stocks also that could be potential buzzers in today's trading session other than the cement pack.
Well, yes. So first up, let's talk about Garden Reach Shipbuilders, and they've given some operational data for the year gone by, where they say that revenue in FY24 saw an uptick of 33% on a year-on-year basis, and they've achieved highest ever turnover in FY24. So keep an eye out on this counter on the back of this update. Moil will also be in focus, and they've increased their prices across parameters. Prices of ferro grade of manganese ore with manganese content of more than 44% have been increased by 6%. This will be with effect from 1st of April, and prices of other ferro grades of manganese with content below 44% have been increased by 3%. So on account of these price hikes of iron ore that have come into effect, keep an eye out on Moil as well. Moving on to Canara Bank then, where they've received approval to initiate process of diluting 13% stake by listing Canara Robeco Asset Management Company. So perhaps on monetization being done over here, it will get listed. So keep an eye out on Canara Bank as well. Infosys company expects a refund of about 6,300 crore for earlier assessment years. This is income tax refund. So keep an eye out on Infosys as well. Some positive news flow coming in over here. GE Power, the company has won 2 orders worth 25 crores, and Newgen Software, the company has won 3 orders worth about 50 crores on account of these order wins that have come through. Keep an eye out on both these counters.
Thanks, Ashesha. So we'll keep an eye on all of those counters then. But let's just take a quick break, and when we come back, we'll keep an eye on some more stock-specific news.
Hi there, welcome back. Still logged into Market Cafe on ET now. Now, my colleague Ansh is joining us to give us a detailed insight on how the month of April has been for the Wallstreet over the past 10 years. Should the street hope for good gains or for muted returns? What's the seasonality been like for the month of April over the course of 10 years? My colleague Ansh is here with all of those details.
So this is a study based on seasonality, and we have collated data for the month of April of last 10 years, and as per that, market seems positive for the month of April historically. But talking about Nifty first, in last 10 years in the month of April, index has delivered over 2% average return and has been positive 6 out of 10 times in the month of April, showing 60% probability of being positive. Whereas the mid cap has been positive for 8 out of 10 April, giving an average return of around 3.6%, whereas if we talk about small cap, it has been positive for 7 out of 10 times, giving an average return of 4.6%. Now let's talk about sector indices. On 10-year average basis for the month of April, most sector indices look positive, with Nifty Metal being the top gainer, gaining over 5% on an average basis and closing in green for 7 out of 10 times. Whereas on the losing front, we have Nifty IT giving an average return of minus 0.6% and declining for 7 out of 10 times. Let's have a quick view on stocks as well. So in F&O space, we have 12 F&O stocks that have managed to gain every time for 5th consecutive April months, where they are PI Industries, Syngene, Bajaj Auto, Divis Lab and Info Edge, each giving an average move of more than 10%. So in short, April month looks positive.
Alright, thanks Ansh for that roundup. As we enter a new financial year today, let's also understand what will be the major cues for markets in financial year 25, elections, and what else can drive the Nifty higher then. Anisha is standing by with that snapshot.
Promises to be eventful and a year yet again. A lot of cues really lined up. The biggest, of course, is the election outcome, which we're expecting at the start of the month of June. But more importantly, the policy action after that towards the Viksit Bharat 2047 aim is something to watch out for. Interest rate, that had already peaked for now. But when does the reversal start is the big question. Part of the street is expecting it's going to be end of this year. That's another factor to watch out for. And of course, India becoming part of a global debt indices like Bloomberg as well as JP Morgan will mean more flows for India. Earnings growth, that's been the fundamental reason why the Indian markets have been doing a lot better than the rest of the economies. But the question is, will the growth rate peter? Especially for the mid-cap and the small-cap indices, we had seen that the growth rate in FY21 to FY23 was 48% for small caps and 31% for mid-caps. Going forward, it is expected that growth rate will peter down. Street is still expecting a 31% growth rate for the next couple of years for mid-caps, but for small caps, it is expected to come down to almost 31% versus 48% growth that we saw over the last couple of years. And the question is whether that is factored in the prices or not. The other thing to watch out for is, of course, the IPO action. We had over 75 IPOs in the year gone by and a bunch of those block deals and QIP. Will that momentum sustain? And talking about momentum, SIPs have already nearly touched the mark of 20,000 per month. Will it hit 30,000 per month? Because FIIs were net sellers by over 1 lakh crore rupees in the year gone by, over 14,000 crore rupees, and DIIs were supported with over 2 lakh crore worth of inflows. Will that trend really continue? But apart from that, individual things that you need to watch out for when it comes to the markets, and Nifty, of course, the frontline index, there are 3 to 4 big things to watch out for. FMCG, that was one of the sectors which was a big underperformer. It gained by only 15 to 20%, and I say only to 15 to 20% because Nifty has managed to gain almost 28% in the year gone by. This was a stark underperformer. Will things reverse? Because for the likes of ITC, etc., the good news of demerger is already behind. For Asian Paints, there's headwinds of more competition. What is there in place for FMCG to turn around is the big question to watch out for. Not just that, we're also watching out for HDFC. That stock is down 10% in FY24. Huge underperformance. Will it surprise and turn around? And remember, this individual stock contributes almost 10% to Nifty. So what are the chances that HDFC would be the big star performer in the coming year? Also, of course, about Reliance, big outperformer that is. That stock alone has managed to gain 41% in the year gone by, and does not even include the demerger that happened of Jio Financial Service. What lies ahead? Has it topped already? Or there could be further triggers in terms of value unlocking that might lay ahead for the company. Those are the big questions that we need to watch out for, because these 3 or 4 factors itself constitute almost 30 to 40% of the Nifty, and that can change the overall dynamics by a whole lot.
Well, Anisha, very interesting data over there. Thanks so much for taking us through that. Let's also take a look at what the brokerages are flagging off bright and early this Monday morning. And well, Morgan Stanley has come out with a rather lengthy and in-depth note on the Indian IT space. They've gone ahead, rated each stock and given a price target. So let's start by looking at what they're saying. For TCS, they've maintained an overweight rating but have cut the target price to 4,350 rupees. For Infosys, they again gone ahead and maintained an overweight but have cut the target price to 1,750 rupees. For HCL Tech, they've upgraded the stock to overweight from equal weight, so positive coming over there. But yet again, they've gone ahead and cut the target price to rupees 1,730 from 1,750. Wipro, on the other hand, they've maintained an underweight rating, but they've cut the target price to 450 rupees. For Tech Mahindra as well, they've maintained their underweight rating but have gone ahead and slashed the target price to 1,190. For LTI Mindtree, they've maintained an equal weight rating, yet again gone ahead and cut the target to 4,800. For Emphasis, they've maintained an equal weight rating once again, but have gone and cut the target to 2,600 rupees. For Cyient, they've maintained an overweight rating, slashed the target prices to 2,400. For Coforge, they've maintained an overweight rating, but have cut the target price once more to 6,500 rupees. When it comes to the overall IT pack, they're saying that after the Accenture results, growth seems to be moderating, and they've also lowered their sector earnings per share EPS estimate coming in. They're saying that there are better macros and that is improving the commentary from hyperscalers and investors positioning to keep the neutral to positive, and they're saying that the rebound hopes in the second half of the year should keep multiples afloat as well. So when it comes to Morgan Stanley's IT bets, what are they betting on? They're betting on heavyweights, the likes of Infosys, TCS, HCL Tech, and these three is where Morgan Stanley is going ahead and maintaining their bets. They're saying that moving ahead also, they're saying that when it comes to Infosys in particular, they've maintained their overweight rating target at 1,750 rupees. They're saying it's a catalyst driven idea, and Q4 results and revenue guidance will be key catalysts to watch out for the stock going ahead, and they expect a 3 to 6% constant currency revenue growth guidance. Base case growth hinges on strong deal wins as well, so that's another tailwind for the company coming ahead, and growth hinges on the conversion of these deal wins. So well, positive note coming in on Infosys in particular, but well, yes, that's Morgan Stanley's outlook when it comes to the entire IT space. But Shreyanshi, what are the other brokerages this morning?
Absolutely. So there's a couple more that I'm looking at. Now, when you look at Tata Tech, there's a positive note rather that's coming from BofA. Now, when you look at their view, they've upgraded it to buy from neutral, and the target is at 1,250. In terms of key triggers, they're saying that the aerospace will be joining auto in steering financial year 25 growth. And in terms of the client concentration, then they see it turning favorable as well. Now, they're also saying that net neutral implications of shift from EVs to hybrids is something that would be a key factor coming in as well. And they're also flagging out the secular ER&D tailwinds as well as financial year 25 prospects that will be helping the counter. So that's the view coming in from BofA on Tata Tech. But moving on then, let's take a look at Muthoot Finance and what Investec has to say about it. They're maintaining a buy with a target at 1,550, and they're also initiating long fast coverage. Now, they're also seeing higher than anticipated growth in the gold AUM, and when you look at the curbs on IFL gold loan operations, they see that also aiding the company as well. Now, in terms of the gold price, then they're saying that the average gold price has grown by 4.5% quarter on quarter in Q4. And another thing that they're flagging out is the slowdown in unsecured loans. Now, going ahead, they also expect upgrades to consensus estimates post the fourth quarter. So that's largely the word coming in on Muthoot Finance from Investec.
All right, with that, let's get a move on then. And does the volatility in the market warrant caution, or is this just a temporary blip? Where should investors park their funds? What are the key themes and stocks to watch out for? Let's hear it. Let's hear out the views from market experts Vikas Khemani, Prashant Khemka, as well as Dinsha Irani.
Pharma industry, let's take for example, the total industry size is about $50 billion. Total market cap today is $200 billion. This $200 billion in last 20 years has grown at 18x. Right? And many companies in that period has become 100x and 200x. So a sectoral growth wealth has got created. This $50 billion, by the time Amrit Kal ends, will become $450 billion. It means Pharma itself would have a market cap of $2 trillion.
Asset management companies also we continue to evaluate. At this point, I'm not sure that we have any one of those in the AMC portfolios. Certainly offshore portfolios as of now, we have very limited exposure to the asset management space. But we do have distribution companies, wealth management companies, as well as some of these other intermediaries which service the asset managers and wealth managers.
There are certain pockets within like tourism, hotels and tourism, which looks very exciting to us. And I think that is a space where we may have increased our weight in the interim as such. So that's why overall there may be some replacement happening there. But that's a space that we remain fairly bullish on.
All right, that's all we could pack for you on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Snehi Shah, as well as the entire team that put this show together. Thank you so much for tuning in. You don't go anywhere because the market takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.